Hi there, welcome to Kneppyinvest. I am fairly intrigued by the company I'll be featuring in today's video, Genetic Signatures, ticker code GSS. They have provided $9 million of free cash flow in the first 9 months of financial year 22. Now, I thought this company could have been a significant beneficiary of COVID-19, and they definitely were. You'll be able to see that in the chart, and also when we look at the cash receipts. And the question I have, and the reason I'm intrigued about this company is I think even though they have benefited from COVID-19, those benefits could be long lasting, even when COVID-19 becomes just an afterthought and something that's only going to be featured in our history pages. So let's get stuck into it and look at genetic signatures and why I'm intrigued about this company. Genetic Signatures develops and manufactures molecular based test kits for infectious diseases. They use their novel three-base technology, which changes DNA sequence, detects the most common mutations, is rapid, low cost, and accurate. And that detection kit is called Easy Screen. It's available for sale in most major markets and expanding into EU and the USA. So not only do they test for COVID-19, it's a whole range of different infectious diseases like salmonella, norovirus, rhinovirus, influenza, superbugs, syphilis, chlamydia, dengue fever, Zika virus, West Nile virus. So many of these infectious diseases they can test for. So it's not only just coronavirus, and that's why I'm quite positive that eventually the traction this company has received or gained in the past 2 years because of coronavirus will continue well after coronavirus is just in our history pages. Genetic signatures has been around for a while, since 2001, developed by Dr. Jeff Craig, and they listed on the ASX in March 2015. Now, the current CEO is Dr. John Melky. He's been actually with Genetic Signatures since 2003. I actually do like when a CEO has been with the company for a long period of time. He has a 0.8% holding in the company, so not a lot of skin in the game right there. And one of the largest shareholders, if not the largest shareholder, is Asian Union Investments. They have a 26.2% stake. Current market cap of Genetic Signatures at $1.24 is 178 million. Doesn't seem too stretched, particularly because this company has a fair bit of cash on hand, and they also are operating cash flow positive and free cash flow positive as well. And the ticker code for Genetic Signatures is GSS. Now, the whole reason I decided to do a video on Genetic Signatures is just to have a look at the most recent March quarter results. So have a look at that in the next slide. But before I have a look at that, I just want to go back 1 year ago to the March quarter in financial year 21, just to see how this company has performed over the past year. So if we go back 1 year ago, they received $4.6 million in receipts, but were operating cash flow negative by $3.4 million. And even though they were burning through a fair bit of cash this particular quarter, they still had a lot of cash on hand, $31.9 million by the end of this particular quarter. So let's have a look at the most recent March quarter. And the very fact I am doing a video today suggests that things have improved for the company over the past year. And things have definitely improved for Genetic Signatures. The question I have is how much of this improvement is solely because of increased testing because of COVID-19? I don't know. They didn't really mention it in any of the presentations or any of the commentary, but I would just like to know how much of this increase is because of COVID-19 testing. Anyway, receipts and customers rose by $7.3 million from the previous March quarter. And even though administration costs up $1.7 million, staff costs up $900,000, for some reason product manufacturing and operating costs down $900,000. So receipts grew at a significantly greater rate than cost. That means the company went from being operating cash flow negative by $3 million to being operating cash flow positive by $2.1 million. And the majority of that fell to the bottom line, and they grew their cash on hand from $37.5 million to $39.1 million. Now, you might have heard me in other videos that, in my opinion, one of the most important functions of a management team, particularly those management teams that are running a company that is profitable, operating cash flow positive, free cash flow positive, is deciding to do with the cash that is produced in their operations. And this is called capital allocation. So the company could provide a dividend to the shareholders, could do a share buyback, increase money on research and development, pay back debt. So those are some of the things a company can decide to do with the cash they are producing in their business. So I do like those companies and those management of companies who are transparent in what they are thinking. And Genetic Signatures did exactly that in their presentation in regards to the use of funds, to the use of that $40 million they have on hand right now. So these are some of the planned use of funds: instrument development, $10 to $12 million, future US FDA clearances, up to $2 million per product, additional personnel, sales, support, clinical, regulatory, marketing and launch costs for new products, development of new application technology, decreasing time to result, ongoing research and development, and IP costs. So I like that the very fact that they have included this in their presentation, because it gives us more clarity on what the management of this company is thinking about for the future. Now let's have a look at the receipts history for Genetic Signatures going back all the way to March quarter 2015. And to be fair with you, from the March quarter 2015 to the March quarter 2020, a 5-year period, receipts, even though they did grow, they were growing at a very snail pace like. So they grew from 200,000 to 1.2 million. And you can definitely see, if you can see this chart, how beneficial COVID-19 was to Genetic Signatures, because receipts grew from 1.2 million to 11.4 million in 2 quarters. And the majority of that, if not all of that growth, was because of COVID-19. We did see receipts pull back in the start of 2021, but over the last 3 quarters, receipts have gone back up to over $10 million. So the only question I have is, if COVID-19 went away tomorrow and there was no more COVID-19 testing, how much back would receipts fall from 11.8 million? If they fell all the way back to 1.2 million, it suggests this company really has not grown all that much over the past 2 years. Now, let's have a look at the chart, the weekly chart for Genetic Signatures going all the way back to 2017. I've actually separated a Genetic Signatures chart into 2 sections, pre-COVID and post-COVID. And I just wanted to compare where the share price is right now to where it was pre-COVID. And if the share price goes back to where it was pre-COVID, that is suggesting the market is not thinking there is any growth, non-COVID-19 growth for this company. And that is exactly where we are now for Genetic Signatures. So if we go to the pre-COVID times, particularly during 2019 and the start of 2020, share price of Genetic Signatures was going sideways, fluctuating in between about $1.30 and $1. And then it took a few weeks after COVID-19 started really making the news before the market realized Genetic Signatures was really going to benefit from COVID-19. And that's why the share price rose from $1 all the way to about $3. But that was really a short-term sugar hit. And then we saw the share price of Genetic Signatures pull all the way back to $1 and $15.20 by about April or March of 2020. Share price has really been going sideways ever since then. So right now, the share price is at around $1.20, which is very similar to where the share price was pre-COVID. So again, the market is not baking any growth in any of these other testing kits right now for this company. So that's why I'm excited about where Genetic Signatures share price is right now, because the main difference between where the company is now to where it is back then is the amount of cash this company has produced over the past 2 years. So they have a lot of cash on hand, and that is very important for this company moving forward, because it gives management flexibility in what they do with that cash on hand. That's all I have for this video on Genetic Signatures. They provided $9 million of free cash flow in the first 9 months of financial year 22. That could be up to $13 million for the full financial year. I do think the market is a little bit undecided about the future of this company. That's why the share price has pulled back all the way back to pre-COVID-19 levels. And that's another reason why I'm intrigued about this company. The other reason I'm intrigued about this company is exactly what they're doing, providing detection kits for all these infectious diseases. And I do think there is a lot of potential growth for this company moving forward after COVID-19 has become an afterthought. So that's all I have for this video. If you want to provide any of your thoughts, just leave in the comment section of this video. The last thing I should say is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. That's all. Have a good day. Bye.